What's up, guys? Welcome back. Today we are going to talk about 11 books that Bill Ackman makes his analysts read before they start working for him. First, quick side note, did you guys know that Bill Ackman's actual name is William Albert Ackman? I've been following him for almost 5 years now, and I just learned that Bill Ackman isn't his real name. Comment down below if you actually knew his real name. Anyway, getting back to the video, you might ask, how do we actually know that Bill Ackman really makes his analysts read these books? Well, one time Bill Ackman went on a fishing trip with a fishing guide named Oliver White. He was so impressed with this young man that he decided to hire him as an analyst for this company, Pershing Square. According to him, before he could start the job, Ackman made him read these 11 books. So be sure to hit that like button to help out with the algorithm, and let's jump right into what these books are. Number 1. Security Analysis. This 1934 classic for investors is an essential read for anyone who trades or is looking to trade in the stock market. In Security Analysis, Graham proposed a clear definition of investment that was distinguished from what he deemed speculation. It read, "An investment operation is one which, upon thorough analysis, promises safety of principal and an adequate return. Operations not meeting these requirements are speculative." The book represents the genesis of financial analysis and corporate finance. As per Warren Buffett, this book is his Bible. A lot has changed on Wall Street since then, but the principle of investing in undervalued firms hasn't. This book takes you to the time when lawmakers were still learning from the Great Depression. The main takeaways from the book were to check a firm's soundness before investing in it, and to analyze common stocks by earnings, dividends, and asset value. Graham and Dodd scolded Wall Street for its focus on a company's reported earnings per share, and were particularly harsh on the favored earnings trends. They encouraged investors to take an entirely different approach by gauging the rough value of the operating business that lay behind the security. Number 2. The Warren Buffett Way. The Warren Buffett Way, a book by author Robert Hagstrom, which outlines the business and investment principles of value investing practiced by American businessman and investor Warren Buffett. The book distills the essence of Buffett's strategy into 9 simple principles that can be utilized by investors of all levels. The life lessons from the book truly are timeless. The big idea of the book is to act independently. You are neither right nor wrong because the crowd disagrees with you, he wrote. You are right because your data and reasoning are right. At his core, Buffett has confidence in his own abilities and in the research he's diligently collected to make decisions based on fact rather than on public opinion. Buffett's criteria for companies to invest in boils down to this. Within an industry you understand, find established companies that are run by good people and are currently undervalued for whatever reason. Then, bet big. You'll notice that none of Buffett's criteria has anything to do with the latest stock prices, media hype, or public opinion. Certainly, the news may be a great place to pick up indicators of companies that fit the other criteria, but at the end of the day, Buffett looks for companies and managers that exhibit trust, integrity, and value. His theory is simple: invest in what you know and know what you know extremely well. We can all take a lesson from his book. Number 3. Confidence Game. How hedge fund manager Bill Ackman called Wall Street's bluff. Confidence Game is all about Bill Ackman, founder of Pershing Square Capital Management. He identified municipal bond insurer MBIA as being systematically important, yet drastically understating the level of risk it was taking on. As expected, Ackman's position caused quite a stir, which led to increased scrutiny. Unfortunately, the scrutiny was directed not at MBIA, but rather at Ackman and his firm. Even the media joined in the attack, with the Wall Street Journal and the New York Times taking a decidedly negative tone on Ackman while ignoring his arguments and rushing to MBIA's defense. Christine Richards' Confidence Game is an insightful, timely, and fascinating high-speed drive into the often difficult-to-penetrate world of short sellers, with its particular focus on Bill Ackman and his campaign against monoline insurance giant MBIA. Number 4. Beating the Street. Legendary money manager Peter Lynch explains his own strategies for investing and offers advice for how to pick stocks and mutual funds to assemble a successful investment portfolio. Similar to the Warren Buffett way, Peter Lynch encourages investors to do their due diligence before investing and not follow the public hype. Peter Lynch chooses companies with healthy balance sheets and favorable prospects, but are not of interest to Wall Street at the time. The book is filled with pearls of wisdom from Wall Street mastermind that are sure to help starters and regulars of the market. Number 5. Quality of earnings. As the title of the book suggests, the main focus is on earnings and the quality behind it. The first 5 chapters deal with the reason why you shouldn't trust analysts, auditors, letter to shareholders, and disclosures in the annual report. It's not just a simple discussion though. Consistent with the entire book, the author provides examples galore. He even goes through a letter to shareholders and compares what the CEO said to the actual results. The obvious time you ask all the questions about a company is before you purchase it, but the lessons in the book help you to identify the flaws before it comes out in public. This could mean saving yourself a lot of money by selling a deteriorating position. Number 6. Margin of safety. Risk-averse value investing strategies for the thoughtful investor. This highly acclaimed book by Seth Klarman talks about the importance of a margin of safety. Avoiding loss should be the primary goal of every investor. The way to avoid loss is by investing with a significant margin of safety. A margin of safety is necessary because valuation is an imprecise art. The future is unpredictable, and investors are human and make mistakes. Diversification, after all, is not how many different things you own, but how different the things you do own are in the risks they entail. The fact is that a diverse portfolio of overpriced, subordinated securities, about each of which the investor knows relatively little, is highly risky. The view is that an investor is better off knowing a lot about a few investments than knowing only a little about each of a great many holdings. Number 7. The Intelligent Investor. The definitive book on value investing, a book of practical counsel. If you are watching this video, I am 100% sure you already know this book. It's considered the Bible of investing. If you were ever on the fence about reading this book, Warren Buffett calls Benjamin Graham the greatest teacher in the history of finance and calls this book by far the best book on investing ever written. Anybody who wants to invest in individual stocks should read it. In the modern market, where stockers are often priced below or above their true value, this provides opportunities for informed investors to purchase great companies at a bargain and thus beat the appropriate market benchmarks over time. There are 3 principles to intelligent investing. Analyze for the long term, protect yourself from losses, and don't go for crazy profits. Number 8. One Up on Wall Street. How to use what you already know to make money in the market. The second in the list, by Peter Lynch, the legendary fund manager, proves that successful investing can be achieved by almost anyone, and not just the Wall Street investment gurus with some stock research and discipline in the field. His advice is that only invest in what you can afford to lose without that loss having an effect on your daily life in the foreseeable future. He emphasizes on one's financial security before one plunges into the world of investing. In easy-to-follow terminology, Lynch offers directions for sorting out the long shots from the no shots by spending just a few minutes with a company's financial statements. His advice for producing 10 baggers can turn a stock portfolio into a star performer. Number 9. You can be a stock market genius. Uncover the secret hiding places of stock market profits. The book outlines an array of so-called special situations that may offer very profitable opportunities for the investor who is willing to go off the main road of investing by double-clicking on, i.e. bankruptcies, restructurings, and spin-offs. Acclaimed author Joel Greenblatt underscores the importance of a set of basic rules when delving into the universe of special situations. Do your own work, don't trust anyone, pick your spot, and assess the downside, not the upside. He takes the reader off Main Street and discusses all kinds of so-called special situations and how you might be able to find, analyze, and profit from them, i.e. risk arbitrage, merger securities, bankruptcies, restructurings, recapitalizations, leaps, warrants, options, and spin-offs. In the sphere of special situations, you will often find yourself off the main road. You'll be looking at, well, special situations. You'll turn stones that few others turn. Hence, you need to do your own work. You'll find little to no research from other analysts or the media, and if you do, don't trust them. Number 10. The Essays of Warren Buffett. Lessons for Corporate America. The book, The Essays of Warren Buffett, Lessons for Corporate America, is a must-read for anyone who wants to learn how one of the most celebrated money managers of last century operates. In The Essays of Warren Buffett, Lessons for Corporate America, author Lawrence A. Cunningham compiles the key learnings from Berkshire Hathaway's annual letters from 1979 through 2006. What makes the book so impactful is that Cunningham keeps the integrity of Buffett's words from the letter but reorders them by theme to make them much easier to learn from. Ordering the book in this way also makes it easier to see how Buffett's key themes have developed over time. There are close to 50 books that mention Warren Buffett's name in the title, but he calls this one his favorite. Buffett talks about intelligent investing often, and the three main components he continues to go back to are Mr. Market, margin of safety, and circle of competence. Number 11. Fooling some of the people all of the time. A long, short, and now complete story. Finally in the list, we have a revealing look at Wall Street, the financial media, and financial regulators by David Einhorn, the president of Greenlight Capital. Analyzing if the 2008 crisis could have been minimized or even avoided, fooling some of the people all of the time is an important call for effective government regulation, free speech, and fair play. The gripping battle between Allied Capital and Einhorn's Greenlight Capital illuminates how questionable company practices are maintained and, at times, even protected by Wall Street. He describes the failings of investment banks, analysts, journalists, and government regulators. Hope you guys enjoyed the video. Be sure to subscribe for more investing content. Comment down below what your favorite investing book is.